Going over the trades on the day, we had positive results today to break our 3-day losing streak. It was still very wild and volatile and choppy today. The market trades in such a way that's kind of a nervous tape the way it trades, and so we saw that during the pandemic. The only main difference is that the market reverses in tight ranges quite a bit instead of any sort of extensions, and so these are the results on the day: plus 3650 in live trading, and then plus 675 in live trading on the 50K. The 50K portfolio trades 2 micros, 250K play 250K portfolio trades 1 E-mini, and we're trading a 23 strategies. We're trading 24, and now we're trading 23. We've removed tick reversal, which was down 675 today, I believe. Tick reversal, we didn't trade that, and that's not included in the results today. It was down 750, and so let's look at the market and the trades on the day. And so one of the things that we've noticed in the market is the last 2 days, Monday and Tuesday, is that we were long. We were long coming into the close, and the market sold off against us, and then it gapped up. And so it's like, we were right on the direction had we held it overnight. And then yesterday we were long in here, got stopped out. Then we reversed to short right here, like the market would fill the gap, and boom, it just rallied against us. And then overnight it came back lower than where we were. And so those two days in a row where it's really pulls back and then gaps against you, and then rallies and then gaps down. Pretty unusual price action. Today the market went in our favor at the close, and so we got long in here. We were long actually on momentum reversal, had some other trades, and then the market was pulling back, giving back some of the gains, and then it went our favor. And so really big spike here at the end of the day. On the Nasdaq, for example, the range was about 150 points in here, only 150 points, and the advanced decline line was at minus 2,000 all day. It's unusual to see it just flatline at minus 2,000, which would technically be weak, but the market closed higher than it opened, but closed down from yesterday's close. And so the Nasdaq closed higher than open and above yesterday's close. What was interesting, though, is that after all this time, up until 2:30 Eastern time, right here, the range was about 150 points. 12,310 high, 12,160 low, right in there, 150 point range. And then you had this move right here, which was 130 point move, and then kind of chopped around here, pull back, pretty big pullback. Then you had another 100 point move right here. And so interesting price action to see 100 points in about 5 minutes towards the end of the day versus 130 point range in the Nasdaq for until 2:30 in the afternoon. And so same here, 130 points, and I guess let's see how much time that was. 14:16 to 14:28, so about 12 minutes. And then right here, 15:54, and then there's the close at 1600. 1602, it's up at 12,401, and so 100 points in about 8 minutes. And so, being on the right side of these moves is ideal, but picking those moves out of an entire day is difficult. We had strategies that were taking long trades and riding those until the close, and that's what was profitable for us on the day. Momentum reversal was really the day. The momentum reversal on the Nasdaq was really the trade of the day. Let's look at that. It's had some good trades. Had this trade here stopped out, and then had this on. This was on Monday, and then yesterday it tried to go short. It was looking good, and then it took it all back at the very end. And then today we were in the trade. It went against us. Kind of not a big trade right here, and then it surges. 100 points is $2,000, and so if you're up $3,000. In day trading, you can have, 2/3 of the profits were right here in the last 15 minutes of trade or so. So that's just how day trading is, and so a lot of our strategies, all of our strategies right now in the portfolio are day trade, and so we limit it to the day session. So momentum reversal was the trade of the day, and very different than a lot of our strategies, and it's what's working right now. Are these reversals. When we remove tick reversal, I sent an email out before the open, we removed tick reversal, and so we're not trading that right now. And let me show you the portfolio calculator for that. So we were trading this, and this was our setup, and we said we're going to risk another 5K based on the closed trade drawdown from multi-charts. And so this is without tick reversal. It reduces the drawdown, and so it's not yet at a worst case drawdown, and allows you to risk another, I guess, 3,500 to worst case drawdown. After today, we're up 3,500, so this number should be 16,000. 16,000 is the hypothetical drawdown for the current portfolio. So you kind of have to piece these drawdowns together based on which portfolio we've traded. Our live end of day drawdown is this right here as of today. And so this is what we're trading. I sent the updates out. I do have one more update for tick count trend. We're going to trade the 1 minute version of tick count trend instead of the 5 minute version. I'll send that out to you if you're a subscriber. And here is an updated multi-charts closed trade drawdown. It's different than end of day drawdown. This is closed trade drawdown, so the drawdowns can be higher. The difference between a closed trade drawdown is end of day drawdown. Say at the end of the day, your equity is at, say, 1 million, and you went to intraday, you went up to 1.2 million, and then you went down to 1.1 million. You had $1,100,000 in your account. You're up $100,000 on the day, but your closed trade drawdown is 100,000. And so there is no end of day drawdown, but on a closed trade basis, you're down 100,000. And that's what this measures. This is a closed trade drawdown, so it's a little different. You can see all the spikes down, and I had to update. There was some test code that I had that was a little bit different, made it a little bit different yesterday. And so here's all the spike downs and how they reverse. And so that spike down reverse almost made an equity peak. This was, I think, last Thursday. And then we had this spike down right here, and we are looking for a reversal like we've seen here on these. And so looking for a reversal to equity peaks. We're going to risk another. We're going to risk 7,000 after today, I guess. We said 5,000 yesterday. We're up 3,500 today, so 8,500 from where we are today is what we will risk, and I'll let you know the updated values on those. But the risk to worst case drawdown is about 35,000. Not the risk to worst case drawdown, but the current drawdown is about 27,000, and the worst closed trade drawdown is about 35,000. So about 8,000 now. Yesterday it was 5,000. We made 3,500 a day. So our risk is about 8,500 on the 250K portfolio, and about 850 per micro, or 1,700 if you're trading 2 micros. And so that is the multi-chart setup. Let's look at the rest of the trades on the day. Both the Nasdaq and S&P were profitable, and you can see tick count trend had some nice counter trend trades, and something to consider is the shorting rallies and buying dips in this kind of market. The first trade was a loser. The second 2 trades were a winner. Viper shorted that, hit a profit target at just the right time before the market reversed higher. And Cobra 3, it was stomped out. Hard to short this. Continues to be very difficult to short this market. I continue to think that the market should go down, and then it spikes higher. So tick reversal, we didn't trade it, but that was the trade on the day. Momentum reversal was the trade of the day. AVP1 had a minus 25 at the very end of the day. Adobe earnings came out. I thought it might move higher. So not a lot of trades. We had 1, 2, 3, 4, 5 strategies that we actually traded today, and 3 of 5 were profitable. This was kind of a scratch trade at minus 25, and Cobra 3 was it's been losing lately. So you lost here, lost here, lost here. Just a lot of reversals once it establishes the trend. And so let's look at the S&P Cobra 3 ES. It was profitable on the day, plus 1,075. Mirror profitable on the day, plus 675, taking the gap fill mean reversion trade at the open. Momentum reversal S&P. First trade was a loser, second trade was a winner. So the profits on this today were only 375 because it was just stopped out the lows and had to get back in at a higher price. And then one of our new strategies dropped the ball a little bit today. minus 1650 on tick count trend turnaround, dynamic turnaround, and so lost on the short side, lost on the long side. You know, this was stopped out here just as the market rolled over, and then just stopped out here as the market rallies. That kind of market, pretty extreme, and we will continue to research. A lot of late nights, staying up late, studying the market, doing the research, and looking for better ways to trade. You know, if you have a new pattern, if the last 2 or 3 months is the new norm, if it's the new regime, it's hard to justify trading systems based on a 2 or 3 month back test. But it's certainly been a different market environment, especially since February. January was somewhat normal, but February, since February, it's a little bit strange. And then with this Silicon Valley Bank news, much different. And so those are the trades on the day for Wednesday, March the 15th, 2023. And we are moving into our more favorable time of the week for Thursday and Friday. In the short term, the end of the week has been better. Last week it was not. Silicon Valley Bank stuff came out on Friday and it was not. But typically Thursday and Friday, and maybe we'll get some more stability in this market instead of the nervous tape that's constantly reversing. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.